Hello, how's everybody doing? Rocking and rolling. This is 50 Pips here, 12th of October 2015. No trade calls or recommendations. Everybody sponsor their own stuff, and the fact that you're in here means you understand you accept all the disclaimers here on the website, and we're also understanding that we're just performing some live technical analysis in a learning context for educational purposes only. So, guys, sorry I couldn't get this out on Sunday. Had some small tech issues. Was just going to be easier to do it and put it out today. So here we go. So keep in mind today's a fairly slow day because we got a bunch of bank holidays across the board. So Japan, Canada, US, Columbus Day, markets are open, but the bond market is closed. But usually you get slight lower flows. You've got a bunch of Fed speakers speaking later on. Also, Apollo's out of BOC, but fairly slow day. On Tuesday, we start to get some data out of Asia. We've got Australian data. We got that trade balance out of China. Then we've got the CPIs out of the UK. We've got ZEW out of Europe. So things will start to move a little bit. A lot of China data this week. On Wednesday too, we've got those CPIs out of China. We got claimage count of the UK. We got those PPIs, retail sales, core sales out of the US. So clearly things are going to start to pick up with unemployment on Thursday out of Australia. We've got the CPIs unemployment out of the US. We've also got Philly Fed. So, things will start to pick up with Crude speaking again on Friday. So BOJ on the wires. We got some data out of Canada. We've got University of Michigan. So, things will start to speed up and the data flow will start to is pushed more towards the back end of the week. But again, we'll have to see what's going on. We can't play what we want. We can only play the hand that we've been dealt, right? Or decide whether we want to play it or not. So let's look at the markets. Let's try and go through a couple of charts quickly just to get us set up for the week. So we've been looking at metals. Our position has been pretty much, long commodity currencies, long metals, long any commodity really into the last week. So what we were looking at, here we go on silver. We were still stuck inside this broader range, 18, 16, 14. We're talking about all this basing action here. Some people will be talking about some kind of inverse head and shoulders or whatever, but we were talking about basing action at lows. We expected this to be a bottom forming for rotation back into mid and back into high range. So we've had the move back into mid. Now the 16 is going to be pivotal inside the 18, 14 range. Bullish above, bearish below in terms of day close, or at least for a weekly Momo, but we expect it to be chopping around this 16, looking for direction. Ideally, we get a break above this trend line, and we continue back into the 18 mark. So pretty moving quite nicely for now. What is going on gold? Similar thing on gold. Just go back on all the weekly Outlook videos. We've discussed this in detail, but the range in gold, 1200, 1150, 1100. Our assumption was for a move back into mid and a break higher and move back into high. So 12, that doesn't change. We're pressing, look at these previous highs to be the bull bear line for the week. Daily closes above, below, bullish or bearish. Okay, I'm going fairly quickly because this is nothing new, right? All things we've talked in the previous outlooks. What's going on cable? So cable, we had a move back into the bottom side of the range, which held very nicely. We said hold here. We'd expect it to rotate back up at least into the 200 DMA. 155 is the pivotal level, broadly speaking. So here right now, we're looking for direction around the 200. If the bears want to come in and take another stab at the lows, they have to come in and smack it down here and continue to get daily closes below this 200 DMA to try and test lower, to try and continue this series of lower highs, bam, 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 to try and print new lows. Lower lows too, by the way, right? So the bears have to come in and smack this down for a retest of those lows. And this is where the bulls have a chance to try and press it above this 200 DMA, continue the rotation back higher into the 155, which is going to be a key level for the next move, which is either going to be back up into those highs, that descending trend line, or rotation back down into that lower end of the range. So two key pivotal levels for bull bear lines. But as long as it's stuck between the 200 and the 100 on the daily, things could remain very choppy indeed. Australian dollar, no change. We're looking for rotation back into the 72, 72.50s off this double bottom. We expect this to try and get legs and move all the way back up into the 74, 75 now that we had daily closes back above the 72. So now all those swings are sitting pretty because they can start to trail fairly wide and still go for the move higher. Our outlook hasn't changed. 74, 75 is the track. These are the big bull bear lines for the week. This corrective rally still potentially has legs, but to get more Momo, it has to close from a daily, weekly perspective back above the 75s. But right here, it's not expensive enough for us to sell, and it's not cheap enough for us to buy. We're still looking to ride trend trades all the way back into that level, so no big change there. In terms of Kiwi, similar things playing out, right? Right now is basically these 68s are calling. This call the 68 as a bull bear line for the week. Daily closes below the 68, we'd expect back into these 66s. Daily closes above the 68, we think the correction has a lot more legs. We would be looking for 71s on Kiwi. So again, very nice trade. Keep in mind on Kiwi, it's going to be very interesting to see how the monthly closes right here. We're back into this chop zone. This is a 200 monthly moving average. If this starts to close back outside this chop range, this would be very easy. We're trying to highlight here that the shorts were trying to press this here for a move back down, but right here it really looks like the pot odds or the risk reward is to try and play the upside, not the downside, or at least a bit more of a corrective move to the upside. Now, what's going on Euro GBP? Euro GBP on the monthly, we're still stuck inside this chop zone. Unless we break outside of this range, it's pretty much to do about nothing. We'll have to see what's happening. The outlook is break above. We could see a much bigger corrective rally, but we'd expect these to be two zones to sell into if we get there. Back below our ultimate targets, structurally we still remain short for 62.50s to print, but a lot of choppy action inside this area. You can go back in the other weekly outlooks. We looked at this in a lot more detail. Euro USD, no big change. We're looking for that move back into the 11 mark, 111 mid-range, and we said hold above. We'd expect this to rotate back up into the highs. Here, we still expect to see, broadly speaking, rallies in euros sold, but it does look like it potentially has legs to move back into the 115s. We don't think it's very clear. We expect positioning to be broadly sell rallies here. We could still got some move here as far as we're concerned. It's not expensive enough to sell. It's not cheap enough to buy. Look at Friday's range for Momo and flows today. You know, pretty much in range, nothing too spectacular. USD Mexico, we talked about this double top. This was a beautiful selling move for a move back into the 50 DMA. Got a chance to hit that again on another daily close. That move is done. Here, clearly, this is extremely interesting for the week. Keep an eye on the 1630, 16 mark. If these hold, then it could be bouncy zone. But if we start to get daily closes below here, there's no reason why we can't correct much more all the way back into that 200 DMA, which is going to be coming in line with this area, which is about the 1550s, 1560s, okay? Something which I forgot to mention, which we're looking at, you know, for those looking for targets on that swing long on Aussie, as far as we're concerned, there's three primary targets. First target was a move back into the 50 DMA, second target was into the 100 DMA, and the third target is for a move back into the 200 DMA in terms of a counter trend trade. That is playing out quite nicely. USD Canada, keep in mind that we're getting a nice little correction from a bigger move. This is a weekly. If we can't hold above, you know, the 128s, this could start to correct a lot more, okay? So I'd keep that in mind, just a quarter of the eye. Just keep that in the back of your mind in terms of a weekly chart. I think it's an interesting chart to keep an eye out for. But in terms of the trading chart we're looking at, you know, our assumption was for a move back into this area. We had to respect the support. We're looking for that correction back down, which we got. We didn't get any kind of bounce here to sell into, right into these lows. So this is moving in extensions. Keep in mind we're at the 100 DMA. Look at this as a pivotal level. We don't think it's that important. We think this breakdown right here at the 130s is a lot more important. Weekly bull bear line, daily closes below bearish for a move back into 26s potentially. Back above, you could get a little pop. Right now, the two moving averages tend to contain. So we'd say, you know, upside pops, keep an eye on the 50 moving average. Downside drops, keep an eye on the 200 moving average. You know, it's basically these three moving averages, just to give you an idea for sense for direction, okay? What else have we got? What else have we got? Crude, again, no change. We're looking for this to reverse back up. We've put a daily negative close, so it looks like these 50s are being protected, right? So a lot of trading opportunities inside range. We don't like to trade this intraday, but as far as we're concerned, this for us, this is a complex building of a base. We're looking for this to move back up. Right now, we're still stuck in the 55, 50, 45. 55 is a bull bear line for the day or for the week. Daily closes above, 55 attract. Daily closes below, potential for a move back into 45s, but no change for outlook for us. We're still looking for 55s. We're still looking for more upside on crude. As far as the ES is concerned, no big change. We're still stuck in this broad chain. Remember, we're extremely bearish once we started to bounce and we came back into these lows again on the end of the September. Everybody, all the talking heads were starting to get uber bearish at lows. What we said is we wouldn't be surprised to see this start the corrective little rally bounce. We'd not be bearish. We'd definitely not be selling at lows here on the last day of September. We expected this to grind all the way back higher into the 2000, playing out quite nicely. Look at this 2000, the bull bear line for the week. Below 1950s attract, above 2050s attract. I suspect a lot of people will be targeting the 2040s as a corrective bounce. This is pretty much make or break. We'll have to see. There's clearly more room to the upside. We'd still favor trying to sell strength. This is not expensive enough for us to sell yet, and definitely not cheap enough for us to buy. Our outlook is to try and look for tactical intraday nimble opportunities to sell but higher. This is still stuck inside the range for the week. 2050s is going to be pivotal. These are the two big levels to watch. 2050s, 2000s, those are the two pivotal levels. No big change there. On the weekly, you could see it fairly clearly, right? We've popped back into the zone. This is, the 50, 60, 1.8 retracement of that move down. So, everybody's going to be looking at this zone. The only thing on the ES is that the levels are very clear and everybody's pretty much going to be looking at the same levels. As much as USD JPY is concerned, still stuck inside a range, 121, 120, 119, much to do about nothing as long as Crude doesn't come out with his tap dancing shoes and gets the strobe light going and gives us some news. Everybody's waiting to see what happens here. As far as DAX is concerned, very similar to what we discussed on ES. We expect this to be some kind of double bottom bounce. We think there is room to correct all the way much higher. Pivotal level, the 10,000, no big change. I think it's on the blog. If not, hit me up on Twitter. I can post the chart on the blog if you're interested in the chart, but that's pretty much the way we're looking at DAX. Fairly clear action for now. Some other stuff on Euro, you could see this on the daily with the two moving averages. It looks like we've got some more upside. It could correct. We still think that 15 mark is going to be pivotal. Again, don't get fooled by the action today. It's still a very, very choppy day, right? It's slow flows. Let things ease. Let the market come to you. Don't force things, okay? I hope that was useful. Tried to cover as many things as possible. I'll try and get it up on YouTube as soon as possible. Have a great day. Thanks for listening. If you like the content, don't be shy about sharing it. Always much appreciated to see people liking and enjoying the content. Have an awesome one, guys. Take care. Bye-bye.